One of the most highly anticipated earnings this quarter certainly was probably going to be Square. We're talking about a company this month up around 35%. Year to date, it is positive, around 7%. After today, probably not, though. After hours, down around 5%. Let's take a look at these earnings and see what's going on with Square stock. Why is it feeling bummed out? Well, you see Square posted a non-GAAP EPS of negative 2 cents, missed by 15 cents, and a GAAP EPS of negative 24 cents, which missed by 18 cents. Yikes. That is a bad miss in terms of GAAP EPS. It's a very bad miss. Definitely something to be concerned about there. But on the revenue perspective, $1.38 billion, which is a positive 44% year-over-year growth, beat by $80 million. Pretty good on that aspect. And quarter one gross payments of gross payment volume, GPV, as they'll probably shorten it to, $25.7 billion versus a consensus of $26.5 billion. Let's look at some of the finer details. This is what we have to know. So, gross payment volume shy of the consensus. Gross profit of $539 million was up 36% year over year, with Cash App gross profit up 115%. Oh, there you go, Cash App. Adjusted EBITDA was down year over year. It was $9 million this year only, but again, they ended up posting a negative number, so we'd like to see what that loss is. In the last 2 weeks of the quarter, gross payment volume plunged 35% from year-ago levels. So here's the thing that I, unfortunately, have to tell you guys about Square. And I warned this prior to the earnings. There's going to be a nasty second quarter for this company. If you think about Square's revenue and who's really making most of that up, we're going to be talking about small business. Small business is a big chunk for Square. Those are the people using the Square products because they can, that's right, like your food trucks, everything like that. Your small businesses use this for payments. They use Square readers. And if these are places that are going out of business, I mean, I've heard reports of potentially 30% of these type of companies, these small businesses going out of business. Well, I'm sorry, Square, but that's a lot of your revenue that's going to get hit. I'm not saying they won't come back to it in the future, but I do think overall you're going to see a big hit for Square. Square's going to get devastated next quarter. It's going to be bad. But is that something that's going to be priced into the stock over the next little while, or we're going to have to wait until next quarter to find out? I don't know. And I could be wrong. This is not just a random picture of a lady, but this is a shareholder letter. That's right. You wouldn't have thought it. You thought it was just a picture of a lady, didn't you? Nope. So while micro environment remains uncertain, we are prioritizing our efforts to best support our customers and protect our financial well-being. Interesting stuff there. Total net revenue, again, 44% year-over-year growth is massive. You got to love that. And from a profit perspective, they're really rocking it. But the net income line, $106 million lost this quarter is ugly. It's ugly, and that's just part of the impact you're going to see. I just don't want to know. I mean, we're talking about the next quarter, including April and May, which are going to be horrific, and even June's going to be horrible. A lot of these small businesses probably won't start up by then. I mean, I'm just being 100% honest with you. A lot of these companies just aren't going to be doing the business that they were before. And they lost $106 million this quarter. And you're going to see their average transactions just plummet further. We're talking about a big decrease, 40 to 50% decrease in terms of transactions probably for the quarter, which it's going to be ugly. I'll tell you that. That net loss line in the next quarter, you're not going to want to see it. A revenue line, you're not going to want to see either. But gross payment volume did increase 14% year over year. Did not increase as much as they wanted to, really, because that's right, they included really a month of that impact in there. Interesting to see. And that adjusted EBITDA line down 85% year over year is it's a gross number as well. Here's this lady again. This is their shareholder letter. Do I care that much about it? Not really. I'm not reading their message to the shareholders because I'm not a shareholder. Okay, their message to the shareholders is always going to be about confidence. Naturally, they're going to talk about the benefit of e-commerce for them. Square Online is going to be big, no doubt about it. It's where physical gets into the impact that I'm really concerned about it. If we're talking about digital, there's so many players in the digital space, and Square obviously is, I wouldn't say they're number one in that aspect, but there's a lot of players in the digital space. Square they're a very fantastic company. There's no doubt about it. This product it's a very good product, but as far as digitals are concerned, I just don't know what that looks like for them. Cash App is another big thing for them. I think Cash App is a very good potential for them as long as they run Cash App pretty well. Overall, if we're talking about Cash App, again, they'll mention obviously with the stimulus checks and more people are doing direct payments and taxes coming back, Cash App's going to be a lot bigger and more used. So definitely interesting to talk about. So from obviously the revenue, as we saw good growth there. We like to see that. Gross profit did grow. We like to see it. So we saw the greatest impact of in-person transaction as card present. GPV was down approximately 60% year over year on average, and it's only going to get worse next quarter. Our card not present offerings such as virtual terminal, invoices, and e-commerce API were less affected. We saw an accelerated GPV from gift cards and Square online stores. The only thing is they're not mentioning those numbers. They said less impacted. They're probably going to get hit hard. Yeah, I think it kind of scares me as far as what's going to happen if we're talking about decently long term for this quarter. I mean midterm. If we're talking about 2 quarters out, it's going to be pretty ugly. But whatever you want to do with the stock, it is entirely up to you. Cash App continued to drive relatively strong year-over-year revenue growth. Gross profit in March. During the last 2 weeks of the first quarter, peer-to-peer payment volumes, instant deposit revenue, and cash card revenue were modestly affected. But what does that mean? What does that mean? Operating expenses, obviously, they went up. There's no doubt about it. Up 57% year over year. That's crazy. Operating expenses were $629 million. Interesting. Product development was up. Sales and marketing, that's right, was up 48% year over year. General administration up 27% year over year. Transaction and loan expenses were up 291% year over year. Most of that's again based off of what you saw here as far as the impact from the April trends and forward-looking commentary, which is this one's important here. In April, seller GPV was down 39%. Yikes, 39% year over year. It's not what we're talking. That's not what we like to see. During the second half of April, selling EV improved modestly compared to earlier in the month. The improvement coincided with existing and new sellers adapting in contactless commerce. The timing of the Easter holiday and government stimulus program. So as more people had money, they spent more. I mean, that's all they're really saying there. But overall, definitely negative numbers in terms of overall GPVs. I just don't know what that is going to look like for them. In terms of next quarter is going to be ugly. It's really all I could tell you. I don't know if they're going to be showing me the balance sheet in this. If not, I will definitely find it. I think they will. They will. Yep, I got my consolidated balance sheet. Because we need to look what this company is going to do. Next quarter is going to be ugly, and I don't know if they're well equipped for it. Total current assets on this company of $4.3 billion versus last quarter only $3.2 billion. Total assets on this company of $6 billion versus $4.5 billion last year. So good overall improvement in terms of assets. I will say that. From a total liabilities perspective, $4.2 billion versus 2.8 of last year. So a big improvement, or really a big increase in terms of liabilities as well. Overall, the assets aren't outweighing the liabilities by a lot. I mean, $1.8 billion is a lot of money, but that's not as much of a headway as I would have necessarily liked to see, in my opinion. If we're talking about how have discussed. I mean, next quarter we could see. I don't want to call $500 million loss, but it could be. It's going to be an ugly number. That's all I can tell you. And I'm sure they'll get investments regardless, but it's going to be an ugly quarter. And where this stock goes from here, I don't know. So I can't advise buying the stock right now just because of the fact that it's such an uncertain environment for the time being. We're talking about big recessions, a big recession, knocking out a lot of small business, and it's a majority of their company. I just don't know. I don't know where Square is going to be. I know they're going to be fine in the long run. I guarantee they're going to be fine. All I can tell you, though, is for the time being, I'm staying out of Square stock because the value's not going to be there maybe a year out at least. I don't know. It's such a hard thing to judge because this environment is selling like we've never seen before. So it's interesting to me. I'd like to see your opinion.